Okay, very excited to be sitting here with Adam Jackson. My name is Cam Nili. I'm a senior manager from Accenture, and I'm in the digital currency strategy practice. So I've spent the majority of the last few years studying digital assets and digital currencies, and I'm very excited for my conversation with Adam. So Adam, would you go ahead and introduce yourself?
Yeah, thanks, Cam. I'm Adam Jackson. I'm Director of Policy at Innovate Finance. We're the trade association in the United Kingdom for all things fintech. So we have about 260 members representing all fintech sectors. And I think in this context, that includes crypto exchanges, it includes blockchain firms, but it also includes maybe more established fintech, some of the financial apps, includes a lot of payment firms and B2B, and in the context of whether it's digital payments, stable coins, CBDCs, there are some who will be looking to specifically develop those as part of their crypto offer, but I think increasingly right across the spectrum interest in how they can provide those as added value, or indeed some of the infrastructure that we've heard about today that underpins it.
Yeah, so I think when we spoke, what struck me the most about Innovate Finance was that this is an organization that is really meant to drive public-private sector collaboration on emerging topics and trends. And so maybe you can give the audience a little bit of an idea of what the relationship is like between Innovate Finance and the public sector, policymakers, et cetera.
Yeah, sure. We kind of do two things as a trade association. Firstly, we convene the UK fintech ecosystem. So startups, scale-ups, increasingly unicorns. Half of all unicorns in the UK are fintechs, and that's our members. With the professional services firms, the incumbent payment firms, the banks as well. So just bringing them together with investors, really about promoting a common UK ecosystem and looking at how they work together, particularly through supply chains. The second piece of our work is we're the voice of fintech, and that's primarily the voice for startups, scale-ups, unicorns, the pure fintechs in policy terms, with government, with politicians, with the representatives, and with the regulators. And that's been an increasing area of work. We have the Bank of England as the central bank. We have the Conduct Authority, the FCA. We have the payment regulator as well. So we're really working with all of those on the detailed design of regulatory regimes for digital assets, CBDCs, stablecoin, etc. And I guess kind of how we do that, there's a lot of round tables. We have our annual global summit, to which please come along in April every year in the Guildhall in the City of London. We'd love to see you there. And that really kind of is a big version of bringing everyone together, public sector and private sector. But then I think particularly, I play a role in working directly, for example, with regulators. So if we talk specifically about CBDC, I'm on the Bank of England's engagement panel, industry engagement on design and development of the concept of the digital pound. So I'm there, representing not only what our members think, but also, I guess, projecting of what will work best for a vibrant fintech economy. And then equally, what we've seen in the last year is, for example, the Deputy Governor of the Bank of England hosting a roundtable in the bank with our fintech founders to talk about the digital pound, maybe to be more open with them than he might have been publicly around how they're trying to design something, for example, that supports innovation and really getting direct feedback from the founders to the Deputy Governor.
Great, and as we have just been speaking and prior when we were talking over lunch, I think one of the things that was interesting was in your position, you serve as a conduit in many ways of what the voice of the private sector, in this case like fintech companies, where they may be expressing concerns or being more opportunistic about some emerging changes. So I'm glad you brought up the Bank of England example and the digital pound, because being the CBDC conference, we'd like to maybe touch on that a little bit more. So I guess in the context of the retail digital pound, given that the Bank of England has been very forthright about sort of its goals of understanding what the technology might be and putting out a lot of announcements, I think it would be interesting to hear from you what you're hearing from the trade association in terms of what are the challenges or opportunities that are being voiced with respect to the digital pound?
Yeah. I'm going to mention wholesale before we go on to retail.
That's perfect. I could talk about that.
It's worth mentioning on wholesale in the UK, I think we've heard earlier today a little bit about how RTGS systems can potentially shift quite easily to wholesale. And certainly that's the Bank of England's plan. So if we look at the UK, what's going to come first? It will be close to a wholesale CBDC when they update the UK's RTGS next year. They've already done tests with the Bank of International Settlement, Project Meridian, another great code name that you can Google, where they have run a pilot of synchronizing RTGS onto the blockchain, and then also synchronizing land registry, so legal deeds for properties, bringing both of those together on the block, so that then you can completely automate the purchase of a property. There's no settlement risk involved because you link the two. So they've shown that they can do that with the new RTGS. So I think kind of actually we're going to see that capability arrive next year. It's then going to be for industry to start developing applications. So I think that's kind of an immediate opportunity to start playing and coming quite close to a wholesale, initially domestic CBDC. On the retail side, we've got a little bit more time. The bank has done its initial explore phase. We're now in a 2-year period of design and test. No decisions taken, so the kind of stop-go commitment to introduce will be probably 2 years off, but 2025, maybe 2026. But now is the point at which there's detailed work on designing and coming up with a blueprint for the digital pound. So the aim is to have that in the next 2 years. Two areas that the bank is focusing on, I think actually they then kind of map across to some of the concerns of industry. One is they're going to have what they call a national conversation. So again, we've talked quite a bit, and last night's dinner really brought that out, about really engaging the public in explaining and debating what a digital currency is. So they have plans for doing that, and crucially, using, for example, people on the engagement panel. It's got to be, I don't think central banks, you're marvelous people, but probably going out and talking to ordinary people on the streets. I'm not sure I'm particularly well equipped for that, but it's maybe not everyone's forte. I think the more we get kind of real businesses out there talking to their workforce, talking to their customers, talking to people, to the media. So I think that's going to be a big play next year. And then they've got some specific projects they're looking at, and I think, again, this picks up some of the things we've talked about today. One is on retail, so really developing the retail user needs and use case, and small businesses particularly, and the small business representatives and the retail representatives on the advisory panel for the bank are probably the sector that's most keen on a digital pound, and I think because they can see the reduced cost that it brings, and the assurance, the finality. So much more work going on in exactly what needs to get that into a retail environment. And then secondly, offline capability. So big project and work around what's required. The bank's kind of phrasing at the moment is, do you need offline capability? I think, again, our response to their consultation was, yes, you do. And particularly when you then start looking at things like financial inclusion and digital inclusion becomes really critical. so they know they've got work to do there. That's probably, and I think, if we go back to the discussion today, the biggest challenge, and where probably, one area where banks across the world and others can really help. And I was really struck, I think one of the presentations earlier, it might even have been, I think it was Ripple's, emphasizing that there's capability already in those systems for offline availability. So I think that's a big area. More generally, again, it's a lot dissimilar to some of the things we've heard. The incumbent banks aren't terribly keen. I think they've switched to being, they were really lobbying hard against a digital pound. It's now just trying to slow things down a bit, just throwing a bit of sand in the machine to see if you can drag it out. But concerns about the impact on their business model is kind of understandable. I would be doing that if I was lobbying for them. Concerns about the impact on the deposit model. I think there the bank says, look, in the UK, 10% of transactions are cash. That's all. Cash has really dwindled. So if we replace current cash usage with CBDC, it's only going to be 10% of the market. But there's an uncertainty of just where that lands. I think for fintechs, there's interest in this is an added service, particularly the financial apps. But people are still all looking at what's the commercial model, how do you make money from this, and therefore how can you provide it. I think a lot of the thinking is that it's therefore an added value just to draw in customers, and then you make your money elsewhere. I think increasingly people are looking at how you combine that in terms of things like financial management. And I think then it comes back to some of the points we had today. Don't think about this in isolation, but think about it joined up with AI. And in the UK with open banking and open finance. So the more we're combining different sources of data with payments, being able to give people, kind of present back to you, an individual, their own balance sheet and information, advice, insights on their spending. There's a lot of tools going on around that. As well as I think ultimately, it's things like the housing market, potentially just totally disrupting other markets that are not financial, but by combining, and it's back to combining other assets with the financial transaction, having that atomic settlement of all of that at the same time. I think that's where the significant change will come.
Yeah, and just to respond to the wholesale comment, and just generally in the United Kingdom, it's very interesting from a US perspective to watch things from afar, because the RTGS system is being renewed significantly, and as you announced, that will be, I believe, officially live in June, early next summer. And there's a lot of advantages to that renewal program. They're improving interoperability, they're improving accessibility, operating hours, et cetera. So in many ways, the wholesale system has seen a lot of investment in modernization in the UK. In addition to, I think, just to bring in the private sector lens, in the past several years, the Bank of England has extended access to non-bank PSPs to hold money at central bank accounts. So, there's a lot of innovation coming at the wholesale level, which could fundamentally alter the way that the private sector engages in the market, right? And then on the retail side, I think what you had, kind of given me a reminder of is Project Cella, which was a BIS initiative. They had defined what they call an access enabler, right? That can provide services like user experience, et cetera, within a retail CBDC system. So I think it says a lot that the industry is engaging and trying to identify the opportunity areas to create new efficiencies and new opportunities, right? So with that being said, you did mention banks and their interests, right? So I think this is a nice natural segue into deposit tokens, because I think this is another hot topic that within this conference alone has come up several times. So I'd love to hear your thoughts on that, what the community is thinking, and the opportunities there.
Yeah, and I think that ties in, even with the fintech community, the thing we've always emphasized about a CBDC, a digital pound, is that that's got to be part of a diverse set of digital payments options, and therefore that has to be alongside and should not elbow out stablecoins or digital commercial bank money. And I think that is what we've seen, that is the approach that the UK government, the Treasury, and the Bank of England, the regulators, are taking. So critically on stablecoin and commercial bank digital money, but tokenized deposits, we saw a statement just last month which sets out the UK's approach to both of those. And again, I think actually we will see those happening before we see a digital pound. So on stablecoin, regulated stablecoin, not algorithmic, but fiat-based, we will see the introduction of regulatory regime in 2025. So probably about 18 months, that's, fingers crossed. So again, we have RTGS next June, and then the following year, regulated stablecoin. And just on that, I think what was really significant and maybe of interest to people here is the UK government saying, we're not just going to regulate and therefore encourage in payment systems stablecoin backed by pound sterling. Where we are happy and we want to encourage stablecoin linked to any fiat currency from around the world, to baskets of fiat currencies, and they don't need to be issued in the UK. The regulation will also cover regulated payment providers who will need to be based in the UK, but then using stable coins that have been issued overseas. So I think great opportunities for players around the world to take advantage of that. The other thing that they explicitly said, which comes to your tokenized deposits, is regulated stablecoin payment providers or issuers will not be banks. So deposit-taking banks can't issue stablecoins in the UK. They can set up a subsidiary to do it, but they will not be allowed to do that directly, partly because they're looking at a different capital requirement and different backing. There will be quite significant capital requirements in the UK, and basically having pound for pound or dollar for dollar deposited with the central bank. But on deposit-taking tokens, banks who've got a banking license in the UK, the implication is one thing we need to kind of test a little bit more with the government. The implication is, what they've said is, well, if you're a deposit-taking bank and you have a UK banking license, you're covered by all the regulation you need to be covered by to do a tokenized deposit, because, and it's back to some of those arguments, you're just providing the same service, it's simply digitized. So the implication seems to be that they're not going to introduce a separate system, and therefore it's just waiting for a UK bank to come along and go, okay, we're gonna do it. We're gonna tokenize deposits, use it on the basis of our existing model. I think it links in with all the work on regulated liability networks. So I think, on the one hand, there's a kind of line in the sand that says it will be much harder for banks to do stablecoins. You're gonna have to set up a separate subsidiary, or on the other hand, there's a kind of green light already to say, we'll just get on and do it. You are already rigorously regulated. Tokenizing that shouldn't make any significant difference. So I think we will have kind of already, we will start to have different types of money, stablecoin, digital deposit tokens, and then potentially, if the decision is yes, digital pound.
Yeah, and just as a reaction, I think the clarity that regulators are providing in terms of saying that banks may not issue stablecoins as we know them today and are more suited to issue deposit tokens makes a lot of sense, because deposit tokens are subject to prudential regulations and have different capital requirements, stress testing requirements, et cetera. And in the stablecoin world, fiat-backed stablecoins, there's still much that remains to be seen. What's the best practice, right? So in terms of capital requirements, some of the leading issuers, they have 5 to 7 times the amount of liquidity that's required, more than a regulated bank. So, but there's still some things to be seen around how stress testing is managed at scale in terms of issuance and redemption. So it's very it's good to hear that there's some clarity being added by regulators. And so I guess on that note, looking ahead in the UK market, as it relates to other markets, right? We spoke about Singapore and some other areas that are advancing in terms of regulatory clarity. Where do you see the UK heading next as it relates to some of these other regions that are advancing policy?
So we kind of take that route. We've got wholesale and drawdown of onto a blockchain with RTGS next year. We'll have regulated stablecoin 2025, and then maybe digital pound. I think that places the UK in a good place. And part of the advantage of the UK, and it's in part a dividend of Brexit, of leaving the EU, is we you know, to a certain extent, the EU has forged ahead with MITRE and other regulations, but that's it's very codified, detailed, whereas the UK is taking more of principles-based. The UK is common law-based, which I think kind of, again, fits with the legal system here and actually in places like Singapore and Hong Kong. So we've kind of got the more flexible legal basis, the more flexible approach to regulators. We don't have to negotiate with 27 other countries, so we can do things quicker. I think, you know, based on the conversation last night and everything we see, it's also not politicized in the UK. So it's really critically important that regulation of stablecoin, introducing regulated stablecoin, crypto assets as well, and a regulatory regime for those, and the digital pound is all supported not only by the current UK government, the right of centre Conservatives, but by the Labour Party, the left of centre party, which is, as things stand, is going to win the next election in the next 12 months. And indeed, the Chancellor, the Treasury Secretary in the Labour Party is an ex-Bank of England official, so she kind of gets digital pounds. So I think that means we've got quite a solid base that there's stability. We're not going to be affected too much by political change. We can move quickly, so long as the regulator is encouraged to move quickly. I think the biggest disadvantage we have, and maybe compared to some other regimes, is we've got a payments regulator, and we've got the Bank of England, the prudential regulator within there, and then we've got a conduct regulator. So they have to be joined up, and that does require government kind of pushing them and encouraging them. I think we're starting to see more of that from government now. Things have sort of been a bit stop and start, and that's the problem with has been the problem with the UK, where Singapore has just gone on and done it. But I think if we get the momentum behind, then we can move faster. And I guess what we're already hearing from some firms in the US is looking to the UK, where there is a desire to have a regulatory approach, but one that's innovative, that will be more flexible than the EU and will be introduced years before Capitol Hill gets around to doing anything. And at the same time, we haven't got an SEC, so there isn't this desire to just pursue kind of legal-based actions. So I think we've got an advantage to get ahead. Singapore probably will be more forwards. I think in the UK, the advantage is bigger capital markets, more liquidity, and therefore also playing in digitization of securities. There's work going on there. There's work going on digitization of asset management. So it's back to that bigger play of the more we can have the unified blockchain with all aspects of financial markets fitting together. I think that can build on London's traditional strengths, but we need to move fast.
Yep. Well, that's a great finishing statement. So some words of wisdom for the future. And we do have a little bit of time for a question or two. If anybody has a burning question to ask, please feel free to raise your hand and we'll get a mic to you.
I understand that Innovate Finance is about to open a Washington office here in the United States. Maybe you can tell us a little bit about that.
A New York, I don't know what we would call it. I don't think we'll have a physical office. We're about to hire somebody to work part-time in New York. That sounds less I should have said, yeah, we've got a fantastic office in Wall Street. But we like to spend our members' money very cautiously and carefully. But that will be the first time we've had a presence in the States. That reflects, I think, the fact that the US is the most important market for UK fintech firms that are exporting. You know, people like Oak North Bank, which is a digital-only bank in the UK, but provides software for lots of the smaller banks in the US. And a lot of the firms looking to the UK and investing in the UK are US. So Coinbase, Robinhood is starting its operation, launching this week in the UK. So we're seeing it's kind of like the Atlantic is becoming a busy route both ways for fintech. So for us just to keep in touch with our members, it's important to have a presence. It's not going to be lobbying in Washington. So I kind of lead our lobbying work. That will remain, for the time being, really focused on the UK. Our US members have said, look, we've got our own arrangements, we've got our own things for lobbying in the US, but it's more about making those, it's back to those connections, that kind of public-private partnership, particularly kind of convening people. And then I'll pop up every so often, as much to, I guess, to do what I've just done, which is give a bit of an insight what's going on in the UK, but also it's really helpful to days like this where I can go back to the UK and tell our members there what are we seeing, hearing from you in the States.
Excellent. Thank you for the question, and thank you, Adam, for your time. This was awesome. Appreciate it.
Thanks, Cam.
We'll talk soon.